Hello, and welcome to Bitesize Legal, where we tackle legal issues one bite at a time. My name is Drew Jenkins, and I'm an attorney licensed in Georgia and Alabama. And today, we're going to take a quick bite out of partnerships. Continuing on our series on starting your own business, we are going to talk about starting a business with a friend or a partner. Just like starting your own business, if you would like to get started, you are free to jump right into it and add a friend along with it who is called a partner. If the two of you have decided to join business together and start something together, you have formed a general partnership. Now, in the states of Georgia and Alabama, there is absolutely no paperwork to be filed. This is unlike a limited liability entity. If you're forming a limited liability company or corporation or a limited liability partnership, you will be required to file paperwork with the state government. Unlike those, with a general partnership, you can just start doing business right away and even utilizing a DBA or a doing business as name. Again, there are no filing requirements. However, this also means that you do not have limited liability. Instead, all of the partners in a general partnership have unlimited liability, meaning the debts of the company are wholly the responsibility of both of the partners, both individually and jointly. Which means if one of the partners is unable to pay, even though you may be 50-50 in the company, and the partner is only able to say, let's say 5 or 10%, that means you as the remaining partner must pay the remainder of the 90 or 95% of the debt owed by the company. Another thing about general partnerships are not only do they have unlimited liability, but they also give each of the partners unlimited power. So this makes things a little bit easier in that you don't have to have a written operating agreement to help dictate what the terms are. However, it means if your partner makes a bad decision that you're not okay with, unfortunately, you're also on the hook 100% for that decision. Now, you can, and I do highly recommend that you have a written partnership agreement. In this way, you can limit the ability of the partners to bind the company or to make decisions without approval of both of the partners. And generally, it's just going to protect everyone involved a little bit better. So the question becomes, why would anyone form a general partnership, right? If it's so easy to file a limited liability company or a limited liability partnership, when would you opt for a general partnership? And in real estate, I do actually see general partnerships. They're not common, but they're not rare either. They typically are when all of the partners are themselves limited liability entities, including trusts, right? So in this case, you just need decision making and you need to be able to share profits. And since all of the individual partners themselves already have limited liability, and generally it's a single asset property, they're not too concerned about the debts falling onto each of them. And in their partnership agreement, they break out certain indemnities and clauses and whatnot that say, look, I'm only liable for my percentage. And if for some reason you are unable to pay, then, I can basically sue you separately and make you come up with the difference, right? So those are normally how the GPs work. You do see them in real estate, and they work pretty well when everyone already has limited liability. Now, the difference with a partnership, one of the big differences between a partnership and doing it solo or even a sole single member LLC is that your taxes are now different. So whereas before, if you just started a business yourself or you created a limited liability company and you were the single member, you were able to, for federal tax purposes, treat it as a disregarded entity, meaning that all of the income and expenses can show up on your personal tax return. When you have an actual partnership, you're going to be required to file a partnership information form known as a 1065. And then the partnership is going to be required to give each of the partners the K-1, which breaks out their proportion of the income and expenses of the company. So unlike a corporation, which we will cover later, a partnership is a pure pass-through, meaning that all of the debts and assets of the company pass through to the partners of that company. This also gives rise to what's called the phantom income doctrine. So keep this in mind. If your company makes money and you decide at the end of the year to leave that money in the company, you will still pay taxes on your portion of that money that is profit or gain allocated to you For example, if the company increased in value by $100 and you decided to leave that $100 in the company, you own 50%, I own 50%. Even though each of us kept the money in the company, it did not come home to our bank accounts, we will each pay taxes on the $50 gain that's allocated to the company. This is referred to as phantom gain, and it's something that you should be aware of. So to do a quick recap, general partnerships are very easy to form. You're in business, you've got a partner, congratulations, at least for the states of Georgia and Alabama, you have a general partnership. You are unlimited liable for any of the debts of the company. Unless you have a written partnership agreement, both you and or your partner have the ability to make any and all decisions on behalf of the company, which everyone must live with. And for tax purposes, you're going to be treated as a partnership requiring a 1065 return, and you will receive a K-1 on which you will file your taxes. This also gives rise to the phantom income doctrine, which says that any of the gain made by the company at the end of the year, even if not distributed, is still your responsibility to pay taxes on. So I hope you found this useful, if not enjoyable. If you're watching on YouTube, please feel free to leave comments below. If you're looking in WeChat, I look forward to comments in Thread, and we will continue our series of starting your own business next week. And I thank you for watching.